All right, so we're live here. Let me know if everybody's getting a good feed. Getting a message here from YouTube about the stream. So let me know if everybody can hear everything and everything's playing okay. Good. All right, cool. All right. Yeah, no, looking at Netflix here, getting clobbered. Uh, I thought it would probably stop at 470, but this thing's all the way down to 419. This is ridiculous. And all the way down to the 200-week moving average. This could be a good pickup for a day trade tomorrow. If you guys are day traders. Look at that. I mean, that's an epic dump. I mean, 700 bucks 2 months ago to 400 for a, what's Netflix market cap? Like 600 billion or something like that. Holy crap. All right. Anyway, yeah. So welcome everyone. If you're not a member, welcome. And if you are a member, you guys know we just closed out another winner here, or at least the second half of a winner. And this is why swing trading is so awesome, because, you know, we can, you could short up here and you could sell part of it and maybe you get down to your final target and just, hold that second half the whole way. But, we were able to pick up QID up here and SSG, took profits in this area, flipped long, took profits on a couple of names, flipped back short again, and now, we're taking profits again. So, I mean, you between two people, one of them shorting up here and one of them, both all shorting up here, excuse me, market may actually get to that target you finally have, but the person playing both sides of it, the swing trader, is just banking left and right and really exponentially increasing your returns. But I just think that's so awesome. But anyway, I'm glad to have some volatility in this market finally. But anyway, so a pretty bad rollover here. Spiders down 1% again. Triple Qs 1.3. Dow up down just under 1%. Russell 2000 here, 1.8. This morning I tweeted out and I said this rally is not really. So we gapped up a little bit, and I knew the market was due for a bounce, but we never got to that target I talked about yesterday. We really never satisfied this downside target here, double bottom. The futures did. The futures kind of tagged it a little bit yesterday, but I like to see it happen on the cash session in order for it to really mean something. Also on the composite, we never got down. Now we did today, but yesterday we didn't get there. So when I saw the market rallying up today, I said something doesn't feel right. And then I saw the semiconductors. So semiconductors were not participating in the bounce. AMD got downgraded today. So that was weighing down the semiconductors. And when the semiconductors aren't participating in a bounce, or really for any reason, I always look at the semis for a leading indicator. You guys know that. That was just that was very suspect of this rally. And you can see we rallied up on the spiders, and we got back to that head and shoulder neckline, and didn't even really get to it. He got close, and they defended it. So rollover big, and this is a demoralizing rollover too, because everybody, oh, okay, yeah, here's the bounce, it's going to come back, we're going to have a relief rally, and then to have that roll over, that's demoralizing. Imagine if you bought the dip, today, or maybe you chased in and said, oh yes, this is it, we're going to go back up. You bought this little pullback, and now you're just getting flushed out. So that's a demoralizing. Now, just in the last half hour or so, just my Twitter feed, it does seem to be getting pretty bearish on Twitter, for what that's worth. So sentiment is getting a little bit heavy, but the thing is, so usually when sentiment gets really bearish, it's usually a contrarian bullish indicator. Everybody knows that. But we are in a different market now. We're in a sell the rip mode. It's not buy the dip anymore. That doesn't mean we can't. There will be dip buys. There will be epic dip buys, but this market is in sell the rip mode now. So just be aware of that. So yeah, we talked about the semis. Now the semis are getting into some support here. This is a really good area. The market might gap down, might get down to this area tomorrow, but ultimately we have options X tomorrow. There's a lot of shorts pushing this market down, institutional shorts pushing the market down because they, for whatever reason, they need the market to close lower for options X. For whatever reason, they want the market lower. Or maybe they want to gap it down and they want it to close up here and they'll let it rally. But the point is, as soon as that bell rings on Friday, those hedges don't need to be there anymore and they can unwind them, which leads me to believe that we could squeeze on Monday. We also have the FOMC next week, so that's going to throw a wrench into everything as well. But outside of that, as far as the technicals are concerned, again, so 360 on the triple Qs, this gap fill, that probably gets tagged tomorrow. That's very good support. We talked about the composite. So that got into support. You know, that's right there. You know, maybe it gaps down to like 14,000. The spiders, we did hit our downside objective. So this actually got through support, but you have the 200 moving average right there. And on the weekly, this kind of level right here, you can see right around 443, 444. We basically touched it today. So there's a lot of support in this area. Diamond did get through the 200 here. It will have support just lower around 345. And then the Russell, this one I think is interesting. That actually got to a good level here, but if that gaps down tomorrow, this 195 area, I don't know if it gets that low, but that's a major gap fill right there. And I've been waiting for the Russell to hit that for a long time, but that will be support. So now I still think that this market is going to be in corrective mode for at least the first half of this year. But it's not going to go straight down. It's not going to be a crash. It's not going to be 30% drawdown in 4 weeks. It's going to be a slog. But there will be good areas to buy, and there will be rip your face off rallies. So, and some things are getting a little attractive right now, like that 195 area on the Russell, that 360 on the triple Qs. Semis are getting attractive, so keep those on your radar. We also had Union Pacific report today, CSX as well. That actually rolled negative, but those did help out the transports. Even though the transports were negative, they were positive really till right up in the end, but the rails did have decent earnings. Let's see what else. So XLF, so let's talk about financials. XLF, you know, made that high and just pulled right back down. It's probably going to go to that 200. And you got this trend line here. Now you've already hit it once, so if this bounces again, you're probably going to get a lower high, and you get a lower high, it can go through that. So be aware of that. Broker dealers cutting through this trend line, confirming below the daily 200 moving average now. So if this takes out these two pivots here, broker dealers are going lower. JP Morgan again. So this, I got a target of 140 on this one. Again, it may get a bounce here on 145, especially if it gaps down with the market tomorrow. But that's ultimately where I've got it pegged. Goldman did manage to scratch out a gain. So did Morgan Stanley. Morgan Stanley up 4 1/4. So nice move there for Morgan. Let's see. Energy finally starting to show some weakness here, but it is holding up still. I told you guys a 65 handle would be good resistance on the XLE, and that is holding for now. And again, even in a yield or a high yield environment where energy stocks are fundamentally better, eventually it just doesn't matter, especially if margin calls start coming in. It's everything's just going to have to come back down. It won't matter. But energy definitely still the strongest. If we take a look at crude, it did hit my resistance. It is starting to pull back a little bit. We didn't end up taking a short here. I just didn't really feel too comfortable with it, but it is pulling back nicely off that resistance. This should get down to about 80 if it continues to pull back. I don't know if it gets much lower than that, though, in the near term, but that is coming off of resistance there. Nat gas continuing lower. So, we're patient with this. This might actually get to our level after all. So this trade isn't dead. And, we talked about how it was consolidating here, bearish. Well, now it's, it went up, and now if it starts to crash back down, it will no longer, it will, you know what I'm saying? The level will no longer be minor, it'll be major again because you're coming from an extended point. So that trade might still be there. Hopefully we get down there. Let's talk about yields. Surprisingly, yields didn't really do anything all day. TNX inside day, TYX inside day also basically just a pause day for yields. So a little bit of backing and filling going on. Really the story today, strangely, was just Peloton and, well, now Netflix too. But it's like the market is finally realizing that yields are going up and it's going to hurt these growth stocks. It's amazing that Peloton was kind of like what really started to take the market down. If you look on the intraday, this is where it started to sell off at, 12 o'clock. And we look at the spiders and they peaked right around 12 o'clock. So pretty amazing. Peloton was the story that took the market down. But any case, let me just change this style here. 1 second. All right, there we go. So yeah, moving on here. Oh, another thing in regards to yields, we haven't checked in a while, but the home builders, these are getting brutalized. So if rates rise enough, obviously it's going to put pressure on housing. So we want to keep an eye now on home builders and real estate. This one's just a VNQ real estate ETF. So this coming into some support here, but again, rates are going to affect housing. And if, home builders and the real estate stocks start really declining, it's going to put lots of problems on the economy, and it's going to put pressure on the Fed too. Dollar index, nice little pop resumption here. This should start to flag, I would think, over the next couple of days, maybe the next week, and then this should continue to advance. Still loving this weekly pattern, nice test candle and nice pop there on the dollar. Gold was higher, but did come back down off the highs just like everything else. Again, this can still get up to probably 1865, 1870. If it can get through that, then it's a really, it's probably going to get up to 1900 pretty quickly, but I'm not necessarily convinced that it gets through this, honestly. The last couple of times they pumped everything into OPEX, they really pulled the rug out the next week. Silver, a nice move up here to the 200 MA. This is into a wall of resistance right now, though. Again, the setup looks just like the last couple of times they pumped it into OPEX, so I'm very suspicious of the PMs right now. Platinum into the 200 as well. Palladium finally getting above that 100 MA, so palladium, nice little look there, but still will have some supply up in this area. Copper with a nice move today, though. Just got above let's see, what would I have? 451. I think we got another 20 minutes left before the futures close. So if it can stay above that, then you could have a potential breakout there on copper. And this can go back up to 480 if it can confirm above that 451 area. So copper, nice little move. And then, yeah, let's look at Bitcoin really fast. So Bitcoin is fascinating right now to me, because it actually held up really well. It was green, just had a little bit of a dip here in the last half hour or so, but Bitcoin's holding up surprisingly well. That leads me to believe if we do get a bid or some type of short covering rally tomorrow or next week, that Bitcoin could probably go up and test that 46,000 handle in the near term. I don't think it gets through that, though. But for right now, Bitcoin's showing some relative strength. We'll give it the benefit of the doubt. Outside of that, if anybody has any questions about the website, I know I talked about a few things. Like I said, I might offer like consulting and stuff like that, a Zoom meeting, something of that nature, which I think would be cool. And yeah, I know I'm not doing a whole lot with the forum right now, but I'm pretty active on Twitter, and I'll probably end up moving a lot of that commentary that I do on Twitter over to that forum, and that'll just be for members. So you guys get my thoughts kind of like on an intraday basis and so on. But anyways, yeah, let's get into some questions here. All right. Yeah, Netflix is getting pounded. I mean, and there's going to be a lot of people that are going to try and buy because it looks so cheap, but this environment's different. This environment's different. Like, I think because people have been desensitized to it because we've been in it for so long, but excuse me, we forgot how ridiculous the Fed's QE program was. Like, remember when that came out? It was like, what? They're going to do how much a month? And it's, when you have the Fed pulling back, and they're not pulling back fully, but they're pulling back some. You have that extra little buyer, that invisible bidder, that guy that's sitting on the bid when bonds are being auctioned, and when you don't have that anymore, there just isn't the demand for rates or for bonds, and the rates will go up, and it has to revalue stock prices, and it hits tech the hardest. It's just simple as that. So I mean, yeah, there'll be dips to buy, but it's it's not going to work right away. I don't think this is something that's going to be over with. Like I said, we're not going to crash down and this is going to be over with in 8 weeks. This is going to be more of a grind. You could do so, Isaac. You can buy it now if you want. It's because it's not gonna. I'm not sure how it works. It's only $5, so who cares, right? Just buy it. But I'm going to have it switched over. I'll have everybody cancel a few days, excuse me, ahead of time. And then, yeah, it'll just switch it over to the new site. Because I'm not posting trades on the new site yet, just because I don't want to have to do it twice. But I'm thinking next weekend I'm going to do, I'll have everybody switch over. And there'll probably be some hiccups and some, hoops to jump through, but it'll get sorted out. It'll be good. I'm just glad that I'm doing this now when I have 160 members versus, who knows, a year or two from now when I have, triple that, because then it would be even more of a headache. But yeah, the new site looks great, so I'm excited for it. Yeah, let's look at the 10-year. So I think we're going up to 2% in the near term. That's just a given. So that's going to be right up here. I think it can get up to 2.4, but it's not going to go there in a straight line. It's probably going to be, it'll get up to 2%, and then you'll have to pull back, and then, maybe it moves higher. The 30-year actually, this one actually got to my near-term target, but this one should get up to close to 3% eventually. But the 10-year definitely 2% in the near term, near term being the next month or two. Oh, and one little thing I forgot to point out. We have the FOMC next week. The one thing that I did notice today that was strange, maybe not strange, there's probably a reason for it, but volatility is only up 7% again. So now you are getting close to this trend line here again. You make a higher high, when we get back above 30 or 29, it could cause some serious problems. So we got through this resistance in December, but the big boys they weren't done distributing yet, so we didn't have enough juice to get through, support and really start causing margin calls and stuff like that. This time I think we do, but I think we do need to bounce first. But it was interesting to me that volatility wasn't up that much. Again, it leads me to believe that a lot of the selling was OPEX related today. So that was interesting. Yeah, I don't think we're not going to make new all-time highs anytime soon. I have us really at this point going down to, I mean, it depends on where we bounce here, but I think we're going down to at least 434, and then probably 420 on the spider, on the SPY here, and possibly even lower. But I don't have us going anywhere near 5,300 anytime soon. Let's look at Amazon, and especially when you consider with rates pushing higher right now. 6 or 7 heaviest weighted stocks in the S&P are all high PE stocks. So it's just their share prices have to be revalued with higher rates, and it's just the market's not going to be able to push to all-time highs when that's happening. But let's get Amazon. Yeah, that was a beatdown. Let's see. Yeah, you're gonna have some good support at about 3,000, maybe a little bit lower than that. At least near-term support. Obviously, your major level is going to be around 2,900. So somewhere in there. But yeah, this is probably, you know, again, if we get a gap down tomorrow, it's probably, it turns around 3,000. So that's what I would look for there. And then as far as a retrace, I mean, you'd probably be looking, you know, this trend line here. That would be kind of your upside target. So 3,250, somewhere in that range, potentially. Let's see. A good time to buy and hold. I think that's a tough one. It's really, like I said, I don't know if I can give you a exact number of where we'd be going on the SP. Like, I think we could get as low as 420. I don't know if that's like the actual bottom though. The best time to buy and hold though is when the whole market is going straight down with massive volume after you've already had some type of a bear market. That's really when you want to buy. So think like 2009, you had a bear market for like almost 18 months, and then it started to go straight down at the very end. That's when you want to start buying. Nasdaq head and shoulder. It's possible. I see what you're talking about. Yeah, it's possible. You're talking about this, like right here. And that would be your neckline. It's possible for sure. But we don't want to entertain this until it actually triggers, though. But yeah, you could definitely make a case that that could happen. AMD. So good. Yeah, they got downgraded today. And Piper Sandler is notorious for being one of the worst analyst agencies out there. Yeah, so AMD, if this gets to anywhere sub 120, it's going to have pretty good support there. Right there. Look at NVIDIA. Because NVIDIA and AMD trade together very often. So you got 231.66. Yeah, right there. So you got a gap fill, previous all-time high. Right below that, you got the 200 moving average. Let's take a look at the weekly. Yeah, no moving averages on the weekly, but yeah, that's where you're going to be looking for NVIDIA if it gets down there. Yeah, and AMD, I would say, you know, 119. Yeah, so below 120, somewhere in there. That would be a good area. And I mean, look at the semis here. I mean, that's a really good support area. Maybe it wants to get down to this area just because we have so much volume. Sometimes it pierces a level. But I mean, then you got the daily 200 right below. You got the weekly 50 MA not that far away. So this is a good area for a bounce here, I think, for the semiconductors. No, I haven't thought about lifetime membership yet. I did think about potentially like a yearly membership though, if people were interested in that. But once the website, once the site's up and everything's running and we get all the first headaches out of the way as far as transitioning and everything, then I'll start adding some more features like that and start thinking about that stuff. But no, I haven't thought about lifetime membership though. Yeah, no problem, Miranda. Yeah. Yeah, Netflix might not have, they might not have a high PE by the morning. Or it's, yeah, so it's like settling down around 400. That's amazing. If this gets sub 400 tomorrow, I will have to buy this myself for a swing. Let's see, where am I looking here? Yeah, if you get down to like 390, I mean that's just absurd. Like look at all this. So this is your pivot high in 2018, and it took you basically 2 years to break out of this area. So there is a lot of institutional money sitting here. And you think they want to pick up the phone tomorrow and listen to their billionaire clients scream at them because Netflix is, market cap got cut in half overnight? No, they're going to defend that. But yeah, this is crazy. I mean, I thought we'd probably get down to 470 because I just had a feeling it was going to sell off. But this is absurd. 400, if it gets sub 400 tomorrow, I mean, I might have to pick it up. By the way, you see this pattern I have drawn on here? I'll zoom out. The head and shoulders. So that target is 700. We'll say 575, so 125 points from 585. So yeah, so it exceeded that target by far. But it's amazing. It took a whole year of chop, then a little breakout, and then for it to cut through all of this like it's nothing is unprecedented. Yes, I think it's, so Charles, I think it's more like a, I have to do a little bit more research on it, but I think there's a few years that we're kind of like potentially going to end up looking like, but a good example, I think, is like maybe not 2000, but 2007. So you kind of just, you have a bear, and then you double top, comes down, leg up, and then a leg down, bear rally, big leg down, bear rally, double bottom, bear rally. It's kind of like a grind, and it doesn't go down in a straight line until the very end. So that's kind of more what I'm now. I don't know if we crash this hard, but I do have it penciled in for more of a grind. But this type of a year trading is not going to be, 17-year-old kids were outperforming hedge funds in 2021. Passive investing was performing better than it ever has. I don't think that's going to happen this year at all. I think this is going to be a pros year. You're going to have to know what you're doing. You're going to have to know how to manage risk. You're not going to be able to be a cowboy because there's going to be big moves both up and down. But yeah, I think this is going to be more of a grindish type year. Yeah, yeah. Thanks, Freed. Yeah, that was definitely. I kind of wish I mean, obviously, I wish I bought it, but I still remember doing the video on this, and I said, if I had to pick one FANG stock, this was right in July or June. So if I had to pick one FANG stock to buy, it would be Netflix because it's the only one that isn't parabolic, and it's the only one where the 20 moving average is starting to catch up to price. But you look at like Amazon at that time, look at you know, look at where it was going. Look at Google. Google's still ridiculously parabolic. You know, Microsoft. So yeah, I just thought it was out of the FANG stocks, it had the best setup. But look at these monthly candles here on Microsoft. Look at Google, Tesla. Apple's not quite as bad. Look at the semis though. That's this is the type of candle you see at a top, you know, like when you get a big red. Now they could save it up by the end of the month. There's still a week left. But if we close anywhere in this range, like when you see a big red candle on the monthly time frame after a parabolic move and a big green candle, it's usually a signal of the top. It usually doesn't lie to you. Like this is the triple Qs here. That's not a pullback. That's distribution. But yeah, I think Netflix though down there, I mean, like I mean, really though, like 380. Where is this chart? Yeah, like look at, I mean, it's just above, it's bouncing at 400 right now, but if it got down here, yeah, I mean, come on. So this is basically pre-pandemic level Netflix. I mean, yeah, maybe it does go lower eventually. Maybe it goes to 329, but there's no way it's going to just go straight there. Yeah. So let's see. I think we have, trying to check what other earnings we have tomorrow. Oh, just Slumberger. Okay, so no real big names tomorrow. But next week is when it gets interesting. IBM, Southern Copper, Halliburton Monday. Not huge market movers. But Tuesday we got Microsoft, Verizon, J&J, Texas Instruments, GE, 3M. And then Wednesday we've got the FOMC. We've got Tesla, Abbott, Intel, AT&T, Boeing, ADP, Lam Research, Apple on Friday, Visa Friday, or excuse me, Thursday, Apple, Visa, MasterCard, Comcast, McDonald's. So we got big earnings next week, and we got the Fed. Yeah, I mean, rates are, you know, the Fed's way behind the curve. They're just so far behind. And what are they gonna say Wednesday? They can't backtrack already. Because we just printed like 7% on CPI. They're kind of boxed in right now. I didn't talk about VXX yet. I did talk about the VIX. I just said that it was interesting that it was only up 7%, considering how beat down the market was at the very end. I'm not really sure what the VIX is doing here. I think it's likely. Here's two scenarios. Here's the two reasons for what happened today. Either the VIX wasn't that high because this sell-off was OpEx games, or investors are really complacent and we've got a lot more downside. I am in the camp that it's more the former, at least in the near term. But the thing is, I'm not sure. I'd like to play volatility again soon, but I'm not sure how much lower this can go. realistically. It's really hard to read right now. But if we do get it back above 29 or 30, it's going to cause a breakdown. There will be margin selling. The reason why it didn't happen, why I was getting up to 36 in December didn't cause it, is because the big boys weren't done dumping yet. So there just wasn't enough volume to get us through that. But the VIX leverage short vol will blow up probably sometime this year. Yeah, let's look at PayPal. Wow, another one. Yeah, I would avoid this. So you got an obvious level here at 160, but look at this volume. Look at that volume on that selling. That's the market's way of telling you that institutions are bailing on this stock. I wouldn't even try the 618. You bear flagged here. If you want to give it a shot, I would go at go about 160, 155. You got that obviously that 200 week moving average. And you got 150 here, a 200 month moving average. This is a tough one. I would avoid this. This is an ugly chart. Yeah, copper's did it okay, copper's market closed. Okay, let's take a look. Yeah, so okay, we got a potential breakout here. But we got to close back above. We got to confirm it. I think we can confirm it tomorrow. But really what I'm looking at though is the weekly, this big inside bar going back to October. I think that can get us up to about the double top area. I don't think it can get through that though. But yeah, nice little pop there. Yeah, and Utes were green today. So again, like boring names, low PE stocks, they're typically going to do better in the environment that we're in. Control, yeah, it's just strange that what's strange about it is that we were up. There we go. We went from 1850, up into the 30s in like a week. And this right here is what, like a 4% move. Well, this is way more than a 4% move here. And weird, like the VIX ain't even close to where it was. It's just very strange to see it happen like that. Yeah, Ford. Are you a member Midwest? We are short this name. We did sell half of it yesterday for a nice gain, but this should get down to. I know there's the 50 moving average right here, but if we were to really flush tomorrow on the open, this will get down to gap fill. You also look at the weekly. Look at how extended it is still from that 20-day moving average or 20-week moving average. And look at that reversal candle there, by the way. That's a pretty good reversal. But I think Ford is a better name to own than tech right now, but it's just so overbought. It's just too extended. I don't necessarily think inflation is going to help the metals, Charles. And that's basically just because of the relationship between bond yields and gold. But there will be a time to get into gold. I don't think it's necessarily right now. I could be wrong, but typically with yields up, it's just very hard for gold to rally. Let's look at Cisco. Would you be looking to own this for a swing, Bill, or what was your thought process here? Got a good level of support. This, I mean, Cisco is probably one of the tech names that I would say if you're going to own tech, you want to own something like this, something that makes stuff swing. Yeah, so you could probably bounced off of that 100, but I don't like how you rolled over today. Yeah, I would look at it at 56. So you got a 618, you got the 200-day moving average. That's probably going to give you a good bounce. Your 20-week moving average. You could pop here. It could certainly pop here, actually. But this is if you're gonna, like I said, if you're gonna own anything tech, you want to own something that makes money, not a growth stock that just has revenue, like something that makes money, something like a Abbott or an Amgen. I mean, Abbott's gotten brutalized here, but Cisco. So yeah, I was just saying earlier, Sonny. I'm thinking about maybe once the website's up and like running and everything's going good and everything. I was thinking about offering a yearly membership potentially. So, but there's so much going on right now that I'm working on, so that's kind of on the back burner. But it is something I've thought about. Yeah, I mean, I don't know if I'd want to own it long term here. But I mean, what I'm trying to say is I'd rather you own something like this than own, a Netflix or a Roku or something like that, or any one of these companies that doesn't have earnings or, isn't a well-run company, doesn't make things that people need. I prefer people stay in, if you're going to be long anything outside of like short-term swings, you want to own boring crap. Unilever, Procter. There's a reason why Coke and Pepsi are doing so well right now. There's a reason why Verizon came so far off the lows. I've been telling people to own Verizon. AT&T. You want to own some Kraft Heinz, something like that. Something that's boring, that pays a dividend, that's not going to collapse if there's a major meltdown. Yes, the course will definitely be a separate charge. Let's look at Corning. Yeah, so this is going to be, I would avoid this. You do have a lot of support here, but kind of already came down and you're kind of chopping around near there. It's a tough one. See if you got low enough, though, it could be a good buy. If you want to try it, maybe 32 or sub 30. Yeah, I would say, yeah, probably around 32, 33. That might be a good area for a swing there. 'Cause you got a lot of support in here, but you also kind of consolidated just a little bit. So it leads me to believe it has a little bit of juice to move lower. I would like to make a Discord at some point, Kevin, but I don't want to run a Discord at the same time. So maybe well, it's something I've thought about, but again, that's another back burner thing. But we'll probably do something like that in the future. If I do it, it might be like an extra. Uh, I'll have like a separate memberships for that or something. Let's look at ACB. All right, so it's going on sale. Let's see, that's a 5 area. Hold on. Yeah, so really anywhere between like 415 and 430. Um, so for me, this is a midterm play. I'd be looking to pick this up, not really as a swing trade, but as a potential 5-bagger for next or for the elections. CGC is also getting kind of ridiculous. Um, let's see, I think it's actually through this pivot now. Like if you can get it sub $7 right here, or close to $7, I mean it's pretty. Look at how cheap this is. And I know it's cheap for a reason, but I made a lot of money playing these pot stocks in summer of 2020. I was accumulating a lot of them ahead of the election. We didn't have an election this year. We didn't have one in 2019. We did have one in 2018, a midterm. Look what these stocks did into the midterms. Look what they did into the general election. You know, Aurora, same deal. 2018, boom. 2019, nothing. 2020, it doesn't look like it, but this is a move from $4 to all the way up to 12. So there is potential for these if you're willing to throw a little bit of capital at it and maybe be out of the money for a while. But yeah, I really think this is an extremely high risk reward setup. Yeah, the ADRs are actually doing okay. They're holding up. K-Web's off the lows. You know, Baidu's hanging in there. Baidu's actually made a higher high. Baba. So there is so emerging markets. There is kind of some chatter right now that emerging markets could see some money flow as rates move up in the US. So that's something to watch for. Um, Definitely keep on the radar. And I think that these ADRs, you know, Pin Duo Duo, they might have bottomed. And look at the haircut. Now, there's lots of concern about regulation out of China and all that stuff. And but if that cools down, which I think it's starting to, I mean, you look at the valuation on Alibaba and its growth potential. I mean, it's kind of ridiculous. I mean, like this is normally, you know, if you told me that rates were going to go up, you know, then I would say, all right, well, we want to avoid some growth stocks then, so we want to avoid Alibaba. But Alibaba ain't even a growth stock right now, or at least it's not a high PE stock. At least compared to where it traditionally trades. I mean, that's a huge sell-off. Yeah, EWZ. Oops. How do I spell it? There we go. So yeah, so these have started to make some kind of higher highs here. I think what's it, EM? Yeah, this one too. So they're getting there. I'm not 100% sold on them yet, but I think I like the thought process though. SE, yeah, my favorite pig. This is my favorite pigs get fat, hogs get slaughtered chart ever. Um, this is so brutal. So we swing traded this twice and made money. See, this is the you guys know why it's selling off so hard like this? Because when you go straight up for a year and a half and you only have one real pullback, there's no support. It's so like there's nowhere that buyers are really defending this. But I think that you could have a level. I think you got a pivot kind of right here. See, there's a bunch of like tiny, like minor levels, but it's hard to tell which one is like really the one the market was going to respect. But somewhere in this zone, there's a lot of support. Let's take a fib here. Oh, well, actually, I already know where the fib goes because we traded this. Get this out of here. Yeah, so you guys know why we traded this the last week, right? Or whatever it was. We got right into that 618, very close. And then once I saw the capitulation volume, I just jumped down. I knew it wasn't going to go lower. But yeah, there's lots of minor levels in here. I would say this is probably your biggest one if it gets down there, which it definitely can if we have another leg lower. This is probably your best area of chop right there. And it's a 7.5 retrace too. But this probably gets a bounce first, like an actual bounce. It's so oversold, it's ridiculous. Let's take a look at Crocs. Yeah, there's another pig too. That probably wants to get down to $100. And then after that, it's going right to 85. What's the other one? Costco. Look at this one. See how fast these things come down? There's just no support. Just gaps higher every day, and there's just no support for it. But that would be a good swing. I'd actually be semi-interested in this. Around 467, 470, maybe 450. But I mean, you're telling me a grocery store has got a PE multiple of 45? Like, come on, stop it. SE's fair value is ridiculous. Their market cap is triple of what Electronic Arts is. And Electronic Arts makes billions of dollars. SE doesn't. They don't make anything. All right. Exxon. So Exxon's going to, all these energy stocks trade exactly the same. Ton of resistance up here. If it can get to 75, it's brick wall. I will say if it closes above 71.37 on the month, that would be a major sign of strength, though. My guess is that it comes back in pretty sharply before the end of the month. I think that tech probably gets a bid next week, and then the energy stocks start to cool off a little bit, and maybe rates pull back just a little bit as well. So and you guys know you guys see my XLE here. It's just right into resistance also. So all these energy stocks are the same. Chevron, this is getting up close to double top. I mean, Chevron's the best one, but EOG. Let's see, Conoco hit an all-time high. Phillips 66 has got this kind of red bar here. But a lot of them look very similar. Good GM. Yeah, I would take it at yeah, just below 50. See, you're saying 53. It could get a bounce at 53. That's definitely support there. But the level that's gonna really hold, you want it right around 50. See this? You had this move down, then you had an inside bar, and then it failed. You got above 50 bucks, it started to rip higher. That's where your support's gonna be. And if it gets through that, I mean, 46.76 is gonna be a wall. So, yeah. Intel is a turd. What do you want to know about it? It's tough, man. It's just trending down. You got an inside bar here. Yeah, it's tough. This one, yeah, I would avoid it. It probably wants to move down to 45. Yeah, monthly inside bar also. Yeah, not a good look. DPX, is that? Are you thinking of DPZ? Domino's? Yeah, this one's probably good to 435. Yeah, 430. I would take it right in there. 100 moving average. That would be a good area for this one. There will be, I will say, Will, though, there will be a time where, I don't know about Intel, but where the semis, I mean, I wish that if you look at the semis here, every time there's a sell-off, it becomes basically a lifetime buying opportunity. I'd love to be able to get something like, Abbott or NVIDIA, AMD at a major discount. So we'll look for that, but Intel is just, it's a bit of a dinosaur company, and their management acts like dinosaurs, and it's just, the market doesn't like that. All right, guys. Well, I'm gonna get going here. All right. We'll see what happens tomorrow. Again, I think we probably have a gap down tomorrow. This is my thesis. We gap down tomorrow, and then we probably rally into the weekend, or at least they save it into the weekend. I think that I think tech can rally next week, and it'll be kind of a relief rally, and we'll kind of go from there. But anyways, guys, thanks for coming out. Good group tonight. Good discussion. Again, yeah, if you guys got any suggestions for the website, let me know if you guys want to do any of the consulting stuff, because I definitely want to put something like that together. So we'd do like a one-on-one Zoom meeting or something like that. I was thinking like maybe I'd sell them in like a package or something like that, but you could choose between like a 45, a 60-minute, or a 90-minute session, or like a series of sessions. But let me know if you want to do that. I'm also working on the course that's it's coming along. It's a grind, but I got a lot of slides done for it, and it's time consuming, but it's fun though. But anyways, guys, take care. If you guys are members, thank you for being members. If you're not, come check me out on either Patreon or carnivoretrades.com, or follow me on Twitter, or subscribe on YouTube. But anyways, guys, take care, and I will talk to you all tomorrow.